As an investor, what you hope to find when you're doing research are great businesses to invest into. And every now and again, if you're lucky, you may come across an extraordinary one, which is very rare. In the following interview, I talked with Gordon McArthur, CEO of Beeks Financial Cloud, and there's a reason for that name, which we discuss at the end. But Gordon put his own money into this business, and he said at one point, when he was trying to raise money, some fund managers almost laughed him out of the room. Gordon still owns 32.6% of the stock. Since IPO in 2017, Beeks achieved compound annual revenue growth of over 32%. It's cash generative, and the share price is up 400% since IPO. But it seems their greatest opportunity is still ahead of them. They have a unique service that seems to be in high demand from big money arena players. If you have half an hour to spare, watch this interview. And joining me on the podcast and on video is Gordon McArthur, CEO of Beeks Financial Cloud, BKS is ticker. Gordon, thanks for joining me.
No problem, Justin. Thank you for taking the time to do it. Happy to be here and look forward to it.
Yeah, well, listen, I was aware of your company for a while, and then you came out, I think it was in February, with an amazing trading update. And I just read that and thought, there's nothing in this update that's negative. It's all good. I mean, from positive cash flow to growth to contracts. And I literally, the bell opened. Very rarely do I read an RNS at 7 a.m. and buy the stock at 8. But I did with yours. And I thought, that seems fantastic. And so since then, I've been really interested in the company. But for people maybe not familiar, and they should become familiar with Beeks, can you explain what you do as a business there, Gordon?
Sure. I'll kind of give you a couple of minute overview and dial it down into layman and try on IT jargon. So yeah, I mean, it's a fairly simple business model when you strip it all back, Justin. We are a cloud computing company for capital markets, right? So most people know what cloud computing is, right? People buy cloud IT capacity now and pay on a monthly basis rather than deploying it all themselves, right? But that infrastructure still needs to be set up, managed, and run. So we are the cloud for capital markets, right? We put our infrastructure in financial services data centers, and these data centers are very specific, right? We don't go into generic data centers. There's capital markets data centers dotted around the world where all of the trading ecosystem live in, and it's mostly beside exchanges and venues and brokers and banks. And the reason people congregate to these exchanges is because they can connect to each other very quickly within the data center and pass trades through fiber that goes over the roof, rather than sending trades around the world and over the internet, which is inherently insecure and not very performant. So we do cloud computing for capital markets, and that's broken down into low latency networking, infrastructure, and analytics. We've got an analytics offering. So we don't do anything outside of trading infrastructure. Like, we would never host a CRM system or an email system, and we don't go against the generic cloud providers in that space. Our entire platform has been built with our niche in mind, and the technology we use is suited to that, and it's very different from normal IT applications. So yeah, cloud computing for capital markets, and we've kind of got 3 product ranges. And Paul Scott in Stockopedia, he actually, we did some work with an interview with him last year, and he came up with a good way of explaining it, and I'm going to steal that. I can continue to steal it. So our public cloud offering is really a small offering, right? So we've got small, medium, and large. So public cloud is shared cloud infrastructure. It's like AWS or Google or any of the big hyperscalers. You come in onto a website, buy some infrastructure online, and we will provision it and get it out to you. But everything within that environment is shared amongst multiple customers, right? And that's okay for a small organization who maybe wants some trading infrastructure in Singapore, Tokyo, New York, and London. It's all spun up within an hour. It isn't okay for larger organizations who, from a security and compliance point of view, are not allowed to use shared services. So that's where we start getting into the medium side of things, and that's our private cloud offering. And private cloud's really been the driver of the revenue growth over the last 3 to 4 years. And that's where we will build a bit of a bespoke environment for a client. They will come to us with a requirement, and we will build an environment that is mostly dedicated to them. So the servers and maybe the switch, the networking equipment is all dedicated, but some of the connectivity might be shared, right? And these deals can be medium, but they can be very large, right? Our largest client spends about 9 million a year with us, and it's all private cloud infrastructure, right? They have 50 banks running on their platform that we underpin, and across 25 data centers around the world. And then we come to Exchange Cloud and Proximity Cloud, which is really the last few years, and it's really the focus of the company going forward. That's where we'll gain a lot more growth. Proximity and Exchange Cloud are completely standalone environments that we will build for a tier one organization or an exchange. And the previous two, private and public, Beeks will tend to host these in a Beeks space in a data center, right? So we go into a specific data center, take space. In the absolute largest accounts, again, that's not, it fails security audits because our engineers have access to the space. We could, in theory, plug into the servers and do all sorts of stuff that we can manage, but just red flags for security departments and big banks. So that's where Proximity Cloud and Exchange Cloud is different. It doesn't sit in a big space. So pick any bank in the world, they will have their own trading space in New York Stock Exchange and NASDAQ and Singapore, wherever it may be. And we deliver Proximity Cloud to that bank, to that client, and it sits in their own space. So we no longer have access to anything on there. So they basically have their own private cloud in their own space, managed by their own team, which is incredibly valuable for them. And then Exchange Cloud. So we've made a lot of noise about Exchange Cloud, and really that's going to be the driver of revenue for the company going forward. Exchange Cloud is a version of Proximity, right? So Proximity is for a single client, a bank, a broker, a hedge fund, whatever. Exchange Cloud is a multi-home system. It's the same technology that underpins it, but we've managed to securely break it up so that you could have 10 clients on the same infrastructure that is dedicated to you. And that's interesting for exchanges because if you look at all the big mega exchanges around the world, they all run their own data centers, right? So their matching engine is in their own data center. And that means people have to buy space in that data center and build out their own environments. There is no cloud there, right? You can't go to AWS and get an instance in a New York Stock Exchange data center, or B3 down in Brazil, or the Mexican exchange. It just doesn't exist. So Exchange Cloud, we sell to an exchange and we deploy it in their exchange data center, and they sell it as a cloud service to their clients, right? So our strapline, our marketing line is we're allowing exchanges to become the cloud, right? And instead of taking months to build out an environment for a customer to trade, an exchange, if they license Exchange Cloud, can get a customer online passing trades within a few hours, right? Just spin up some servers, spin up some virtual machines. Analytics is all pre-built, and the client has got a trading environment the same day. Incredibly valuable to the exchange and to end clients. So, and the market there is we no one else really there doing it. So Exchange Cloud is where a lot of the company's focus is, and ICE, who ultimately own New York Stock Exchange, or a division of ICE, were the first client, ICE Global Networks. GSC was the second client, and I think even yesterday we've made various announcements that we're waiting on another large US exchange just clearing final regulations. So, and then there's a tail of clients further in line. So high level, 5 minutes. That's what we do: capital markets, connectivity, and infrastructure.
And so just explain it. So for exchanges, why is it so attractive to them? I mean, you sort of touched on there, there's no sort of alternative that can't really get us. So why now? Because, like I said, you've you know, Johannesburg Exchange, you've announced almost regulatory approval coming up on one of the global exchange. So it seems there's a lot of demand out there, and you said there's a pipeline of other exchanges coming forward. So what's attractive to them about this? You know, what's the upside for them?
So for the exchange themselves, it's very simple. So at the moment, the model is if I want to trade on, I'll take NYSE as an example, or NASDAQ or Toronto, whoever.
Yeah.
If I want to trade on their exchange as a hedge fund, I need to go and buy a rack in a data center.
Okay.
I need to go and buy a bunch of servers, low latency networking equipment, potentially some analytics. I need to send it all over there, right? And you know, let's look at some of the countries around the world, right? You know, I need to send that to Johannesburg. I need to send that to Mexico. I need to send that to Brazil. I don't, you know, if I'm an end client, I probably don't have an entity there. So how do I even import it? Who supports it? So it's difficult as an end client. So that's the model at the moment. That's all you can do. That you can use an old school managed service provider who just does the same job for you, right? But they're still buying servers and importing and all that stuff. So what we are saying to the exchanges is stop that. Or you can continue to offer it, right? Because some people will continue to do that. Exchange Cloud is a pre-built environment that if you sign a client up, instead of waiting months and spending hundreds of thousands of dollars in CapEx, if I want to test your exchange to see if my strategy works, I need to go through that process to even test it.
Yeah.
Exchange Cloud allows an exchange to offer a service that says, within 2 or 3 hours, I'll spin you up an environment, right?
Yeah.
For a month. With the market data coming through, you can go and test your strategy, your algo, whatever you want to do, see if it's, you know, got promise. And you can do that within a couple of hours, right? And you don't have to spend hundreds of thousands of dollars. So from an exchange point of view, they're all looking for new clients, new liquidity, right? Their core business is matching trades. So this makes it easy for a client to test the market strategy or whatever they then want to go into production. They buy more, right? They buy a production level amount of infrastructure and they can be live within weeks. From an exchange point of view, they make money on the service, right? So we white label it. Exchange sells it for us. They fill it up. It goes under their contract. We do not contract with an end client, right? So exchange makes money, makes it easier for them to attract clients. It makes it easier for clients to do business in that area, and it gets the trade flow happening quicker, right? So our pitch is getting to the stage of saying to an exchange, why wouldn't you offer this to your client? Like, you're going to make money, can't do it now, makes life easier for your customers, potentially, you know, and as we've shown, it brings more liquidity to the exchange. Why not?
Yeah. Okay. So so it takes a lot to do it themselves. Like you say, it takes a lot of time, a lot of effort, a lot of money.
Yeah.
And you're experts in that field. You can say, listen, we can do this all for you and get it running within weeks.
Yeah.
You know, so okay. So at the moment, I mean, we all know a business. When you have an excellent business, a gap in the market, like you have in something unique, then other people will try and creep in. Is there anyone else in this space doing this at the moment? I mean, apart from, say, the big hyperscalers who could maybe come in or do it, are there existing players in this space?
Not the way we are doing it, Justin. No one is selling a platform to exchanges. There's old school managed service providers who will effectively build out an environment for you, but again, they'll import kit, they'll rack it in a rack after months of waiting for the kit. They'll give you, you know, a black screen command line access to the server for you to do your own thing. We are not going that. We are providing a cloud platform in the exchange. So our strapline is we're enabling an exchange to become the cloud, and nobody's going down that route. Now, that's not to say they won't, but you've got to understand what's happening here. An exchange is a very conservative organization. There's, like, if you look at the big US exchanges, there's trillions of dollars being transacted every day, right? So someone else coming along and suddenly saying, we can do this too. Can you? Right? You need to prove it, right? You need to have referenceability, you need to have case studies.
Yeah.
You need to, you know, it's taken us 4 years to get to the point we're at now. We've now got exchanges using it. referencing it. You know, Canaccord's note yesterday, I'm not sure how many of your viewers will see this, but GSE Canaccord's analysts have taken the trade volume from colocation and available on a GSE public website, and you can see it trending upwards since they launched Colo 2.0. So they're, you know, so it's been successful and they're very happy with it, and they'll reference it and they talk to other exchanges. So even someone coming in and trying to replicate what we do at the moment,
Yeah.
you still have to prove yourself, right? And an exchange is probably never going to go down a dual vendor strategy for this. You pick a partner, because this is partnership. I spend my life in workshops around the world now with exchanges, building these relationships, building trust, talking about experiences of what works and what doesn't work, because this is a big deal for them. This is them. It's their contract. It's their service. It's their end clients. So they do not make decisions easily here. And I think we've got a very defensible way of, you know, first mover advantage is important because, you know, the referenceability and the scalability and improving it. Look at Bit Friday's outage, right? Global outage on the back of a software update. Things like that. People just are so wary of taking risks. So at the moment, we're on our own, and we need to continue to develop products. We need to continue to invest in it, which we will, and we continue to do. Work with the exchanges, both existing and ones in the pipeline, to see what do you want next. Like, how does this make? What else can we build out as part of this, and help the clients? So,
but do you know that's sort of answered the question that you said. The exchanges, they can't afford to mess up and experiment. And like I said, trillions of dollars are going through these. They want a proven strategy. They want someone experts who can know they can do this. And like you say, now you got JSC and others coming on board. And I did read the note previously, and there's a certain amount of FOMO going to happen here when certain exchanges sign up and you get, you know, successful case studies out there. Then others, they say, you're not going to just test it with somebody else to say they can do it when they haven't done it. So it doesn't make a lot of sense. So what about the bigger guys? I mean, you know, we know sort of like AWS and all that, Google, Microsoft, they're in sort of the cloud, but they're not in capital markets, are they, or what?
Not really. I mean, they are and they aren't, right? I mean, so the capital markets is broken into three parts, right? You've got front office, which is the trading execution piece, right, where you're matching trades at high speed and huge volume. And then you've got middle and back office, which is all the administrative functions, you know, settlement, clearing, all that type of stuff. Like, that's all moving to the cloud. Middle and back office is all on its way, right? Because it's big, expensive environments, and there's a lot of big exchanges and banks and financial markets participants that are putting a lot of that up there. The problem with execution is you need to be, you know, latency is everything here, right? Speed's everything. Location's everything. The technology stack that's used, the networking that's used, causes generic hyperscalers problems, whereas we've built the technology to kind of absorb the multicast messaging that the exchanges use. So typical network is it's a point to point, right, message to message. But an exchange has an obligation that every participant gets the same information at the exact same time. So they need to use what's called multicast data format, which means send once, receive millions of times at the same time. So that's a very, like, networks don't work like that typically. They work point to point, like one to one. So multicast is a very specific networking protocol that is not really used much outside of capital markets, and we've built everything around multicast platforms. So listen, we keep an eye on them. They're obviously big and scary and get big budgets, but you know, we you know, in the middle and back office, we would never go and compete there. They dominate, but I don't see matching moving to the cloud because, you know, why would you, right? You know, you look at NASDAQ and NYSE, they've got $300 million colo businesses, right? That's what revenue they make from renting out the data center. That's 10% of the revenue. And then there's the HFT issue. You know, HFTs use their own proprietary hardware. They've got, you know, all sorts of secret stuff that you can't get in the cloud, and they make up 30 to 40% of volumes, right? So if you're going to say that can't happen anymore, you give up $300 million revenue opportunity and then HFTs can't trade and the volume and the exchange dries up. So we keep an eye on the hyperscalers, but am I, are they keeping me awake at night? No.
Mhm. Yeah. So it's worth going through. You were down to the trading update yesterday and inline, but I got to explain to you. I think it's since 2018, you've done compound annual growth of around about 32%, which is phenomenal. So and take us through some of the highlights from the update, if you could, Gordon, yesterday. And I think what's more important is looking forward, what's going to happen. I think.
Yeah. I mean, so just a little bit further back than that, Justin. So, we IPO'd 6 years ago, 7 years ago now. It's kind of that order of magnitude. And we were too small to do it, right? We were told by everyone, don't do it. This is silly. You're far too small. We IPO'd at $25 million, £25 million market cap. We were turning over about £3 million a year. And there was quite a few well-paid London fund managers that kind of laughed us out of the room, right? So we've grown tenfold since then. We were mildly profitable to start because we weren't, when the business started, it was me who funded it. It wasn't private equity or venture capital or angel backed. It was my own money. So we had to run as a profitable business. So if we've not been smooth, right? We've had some really good years. Some years we've missed forecasts a little bit, but we've kind of been consistent around that 25 to 30% annual growth rate. And that's a target to continue, right? If you look at the forecasts, I think they're out in the public domain from Canaccord and Progressive this year. I think the consensus is about 39.5, which is 30% again, right? It becomes harder as we scale, but the size of the opportunities become bigger, and our contracts have become bigger, our clients have become bigger. So how long we can do that for, we will see. But that's the plan, right? That 30% compound growth, 25 to 30%. So we've kind of done that. Well, I mean, I think, and really focus on profit as well and cash generation. So I think one of the most pleasing things from the last year is we have generated cash. We've stopped bleeding cash. It's a capex business, right? It's an infrastructure business. I think there's a bit of naivety in certain areas where you have to spend cash to build out the platform, right? It doesn't just appear free of charge. So we've gone through that. Profit is up substantially throughout the year, through this year, and we're going to continue to focus on that, control the costs as well as growing the top end. And EBITDA, I think, was about 27% up year on year. Probably a bit of a strange figure for us. We're not big at using EBITDA as a measure because depreciation and amortization is quite a big part of our balance sheet. So PBT, top line revenues is where we focus. So so I get, we've been fairly consistent in around that 25 to 30%, and the trading update indicates we're going to be there again. And looking at the consensus forecast, that's a challenge for the year ahead. But we started with, as we said yesterday's update, a pipeline bigger than we've ever had. Some of these exchange cloud deals, well, they can start small. The TCV on them becomes very, very large. Johannesburg has performed way beyond what we originally expected in that. And they're a relatively small exchange, like they're 20th largest in the world. So, they are, we don't really put the commercials out in terms of exchange cloud deals. It's a bit commercially sensitive, and we don't really want anyone, looking at the commercial models here. But Johannesburg has extended quicker than we thought and filled quicker than we thought. So yeah, the plan is, that's the overall company strategy and target from a commercial point of view, is to grow that 25 to 30% compound year on year. For how long? As long as we can.
Yeah. Well, no, when you said, sort of some fund manager, sort of laughed out of the room there, you would think, like I said, it's capital intensive, and you would think there wouldn't be a route forward with all the big sort of players in the space. But you've also found this, special niche here where, like I said, some of the hyperscalers maybe it's a little too small a segment for them. For you, it's massive. and other people can't do it or they're not trusted in this area. So you have found that's a special niche that sort of you're comfortable in. And but you announced like Johannesburg now and what's a third exchange.
Yeah.
One of the largest globally. It's going regulatory approval is happening. How long does that take generally? I mean, any idea?
So I think what we said and we updated in February, it was 3 to 6 months. So um, it's progressed substantially, right? And as we said in yesterday's update, we hope to do a formal release in short order. But I mean, this entire engagement has been on for 3.5 years, right? They don't move smoothly, right? So we were stung about a year and a bit ago where we thought we're almost there, and we were almost there, and some other hurdles got put in place. So we're not far away. I can see, and we're in discussions with the exchange, so we know where they're at. But it's the final hurdles to go. A few final hurdles.
Yeah, and I mean, I suppose it's hard to say how long it takes. To the exchanges are very conservative; they can take their time over stuff. But you're in discussions, advanced discussions with the other global exchanges. Has this become easier now? Like it must be getting easier now. You've got a few under the belt.
Yeah, exactly, and they all talk to each other. So other because exchanges are weird, right? Because not weird, that's the wrong phrase, right? You tend to get a mega exchange that dominates a country, right? Other than the US, where there's 3, but LSEG's pretty dominant in the UK. Then you've got ASX dominant in Australia, Singapore. So they don't really have in-country competition. So it's bizarre. Like I didn't quite understand how much they talk to each other when we started this journey. So they all know of what's going on with both JSE, some of the US stuff we're doing, and there's an acceptance now that wasn't really there. So I've spent the last few months clocking up some fairly substantial emails around the world. You still have to, it's still a long consultative process and relationship build and sell. I mean, it's not a tough gig at all. I get to go to some of the best places in the world and spend time with some of the biggest exchanges talking about what we're doing. So it's becoming easier, but they're never going to be like turnarounds in a month or 2 months because it's such a big thing for them, and they're slow moving, right? They're process heavy. This touches every part of the exchange. So, but it's getting easier.
Yeah. Well, I mean, like I say, they can't afford to take shortcuts or be more than 100% sure. I mean, you can see that from what happened recently with CrowdStrike. It's like how does that happen? Is it But so even now they're pretty even more careful. So I mean, do you know what? There's a fantastic book out called 100 Baggers, and I was looking for traits, and in that book there's not many traits as in sector wise or the kind of businesses they are, but there's certain traits where companies have growth. They start small and they got growth, and quite a few of the companies that did 100 bags. There was a founder owner at the helm because they care more about the business, than the CEO that's brought in there. And so you own over 32.6% of the stock, I think. So, what's your ambition for Beeks and Gordon?
I mean, I think we've been very honest, right? We will scale it and sell it, but we're still a long way away from where I think we can ultimately get to. So we've got a fairly unique setup in here where, all of the staff, as long as you've been here for more than a year, you get share options. And we get a little bit of grief from that, from some of the retail investment crowd, but even some of the institutional holders. But we issue share options every year to staff because it changes behavior, it models behavior, right? So there's a lot of people in here that have worked their fingers to the bone and done long shifts at weekends and who've built up a decent sized shareholding in the business through deservedly so, right? So I mean, I've sold a bit down. There's some of the rules that govern public companies just drive me nuts. Like I'm not allowed to buy a share in Beeks, or I need to do a formal takeover approach because I want more than 30%, right? So, ultimately we'll sell it, right? I might sell a few. I would like to probably be a bit less than 30%, so I've got some flexibility. We can't do share buybacks unless we go through some big process because that would then bump me effectively again. So, you know, I think we're on the verge of a very big opportunity. With, you know, private equity drives us nuts constantly about, you know, would we consider a discussion, and the time is not right. I have shared internally with the staff where I would like to get us to. It's not something we put in the public domain. It sounded ridiculous when we're 25 million market cap. Sounds a bit less ridiculous now, but it's still a long way away, right? So yeah, we've still got a long way to go. I think, you know, one day we will sell it, but it's a way off.
Yeah. I don't understand why people, investors, institutional or private, get strung up about, you know, share options. Or I remember someone said, "Oh, a while back you placed some shares, somebody sold some shares," and so said, "Oh, you're selling. Must be something wrong with the business." Still on 32.6%. He's like blood, sweat, and tears for many, many years. I mean, he's allowed to take a bit of cash out of the business. For heaven's sake, it's like,
listen. I get it. We've worked at all the people, the senior people in here are fairly working class backgrounds. I get it when it's viewed as like a corporate excess fat cat thing, right? But I've never written a share option for myself ever. I never will, right? It's pointless. The average pay of the board is sub 100 grand a year in here, right? We do not milk big wages compared to some of our peers. Like everyone in the senior team could walk out here tomorrow and double the wage, but they don't, right? So everyone needs to live, right? You've got personal circumstances, you know. Fraser sold some earlier in the year because he was building an extension to his house, right? And like, there's nothing wrong with the company, but and you can't really comment on these things. So people need to live, and because we take so little wages, you know, something material comes up in your life, unfortunately, you have to sell some shares. Doesn't mean there's anything.
You should put that in the RNS. Fraser's building an extension here. Some pictures of it. Just evidence.
Yeah. You know, and you know, I've had some personal situations the last couple of years where I've had to sell some shares. I mean, you know, as I say, you know, because of this 30% limit, I one day I will get down below it, but nothing imminent. But because it causes me problems, right? As I say, we can't do share buybacks. So, on one side, it's healthy for an owner to have a big share, but not too big a share, right? Because it actually hamstrings the business a little bit. Anyway, so yeah. I mean, listen, we've got a long way to go to get to the number that I've got in my head, and that's what we crack on to.
And finally, do you know, so I invested sort of back in February, and I've topped up a bit since, but just basically based on where you are and what you're doing for, the financials and all that stuff. But what confirmed to me, and I thought, is they know what they're doing, is I saw an update on LinkedIn and it said, it's the anniversary of Trading Places. And I thought, what's that going to do with anything? Apart from it's the Trading Places. And I really love Trading Places. I bought this DVD back in the time, watched it so many times. And I realized you named after a character in Trading Places. Explain this, please.
So no one really found this until we IPO'd. Or why would you? But so everything in here is named after characters in Trading Places, like our automation engines, like Winthorpe, who's one of the other.
Dan Aykroyd character.
Like it's I was building automated trading strategies 20 years ago, myself and one of my developer friends, and so Trading Places was always one of my favorite films. You know, certain parts of it's not aged pretty well now, but it's still a film around trading, right? So everything in here is named related to Trading Places, whether it's meeting rooms or some of our systems. So and no one really realized until I did an interview with I think it was Bloomberg after we IPO'd, and out the blue he called it out, and I was like, I just have to admit this. So so it's named after Clarence Beeks, who bizarrely is the bad guy, and he's the guy that steals the crop report in Trading Places. So we should have probably picked a better guy. We should have probably picked better than that. But
no, I think that's perfect because it's like it's not too obvious. It's a pivotal character, and he stands out, especially that scene at the telephone box where this woman's trying to make a phone call, and he tells her to go away, going politely. But it's literally I just watched before we came on this morning. I watched the making of Trading Places. I didn't realize Richard Pryor and Gene Wilder originally. Wilder originally supposed to be the cast, and and they couldn't get
Yeah.
them, so they didn't go ahead. But also another interesting bit was like the guy who wrote the screenplay, Tim Harris. He based the two old characters. He said, I used to go to a posh tennis club, and these two brothers who were doctors, they were arguing over every point. And he said, I couldn't base it in doctors. I wanted some other environment. But it's a brilliant film. I mean, you're right.
Yeah.
Certain parts hasn't aged very well, but it's such a cracking film. And
Yeah.
but the fact you even reference a sort of minor character that's pivotal, but stands out is amazing. So anyway, Gordon, it's lovely to chat to you, and well done on the trading update and success so far. Like I say, lots to come. Watch this space. But hopefully we'll catch up in the not too distant future. Thank you very much.
Thanks, Justin. Appreciate it.